Hi guys, you're welcome. In the previous video, we looked at income owings and income prepaid, and I promised you guys that we are going to look at how to prepare the accounts for you to be able to identify the amount that to be taken to the income statement or the trading profits or loss accounts. So we have this example on our screen, which we are going to use to do that computation. So if you didn't watch the previous video, which explains income owings and then income prepaid, I urge you to go and then watch that video so that you'll be able to understand why we are taking the items to either the credits or the debit side of the account. Now, the first item you have is so let's look at the preamble. The following relate to subscription for the year ended 31st December 2020. And the first item we have is subscription prepaid. The requirements of the question is that we are to calculate the subscription that will be recognized in the income statement for the year ended 31st December 2020. So we have subscription prepaid, we have subscription owing, we have subscription paid, we have subscription prepaid, and we also have subscription owing. Most of them with different dates. And so the date is telling you whether it is an opening item or a closing item. And if it is an opening item, you know where it will be. If it's a closing item, you also know where it will be. So now let's get started with the recording. The first one, subscription prepaid, 1st January 2020, 6,000. So the subscription prepaid dated 1st January, meaning it's an opening item. So it's a balance brought forward, which was a carry down in the previous year, which was 2019, right? So 1st January 2020, and we are preparing the account for 31st December 2020. So the subscription prepaid of 6,000 is an opening item. Now, you ask yourself, subscription prepaid, is it an asset or liability? In our previous video, we came to understand that subscription prepaid is a liability because there are payments that have been made, but you have not really earned it. And we also know that all liabilities have a credit balance. So when you come to the subscription accounts, the opening prepaid will go to the credit side. So our balance brought down is 6,000 at the credit side, which is the opening prepaid, because you know that opening prepaid is a liability and liabilities have what? Credit balance. We have the opening owing, which is 4,000, and we understood from our previous video that subscription owing is an asset. Subscription owing is an asset, and all assets have what? Debit balance. Asset because they are money that you expect from your members to pay in the future, right? So it becomes an asset to the entity. So the subscription owing is an asset, and all assets have debit balance, and this is an opening balance. So our balance brought down, which is the opening owings, comes here as what? 4,000. Now we have subscription paid. So this is a transaction between the subscription account and then the cash accounts or the bank accounts. We're not told the medium whether it was through bank or cash, so we can take it to be cash. So a transaction between subscription accounts and cash accounts. Subscription paid. This one is not the entity that is paying the subscription. No. It's members that are paying the subscription to the entity. So it's a non-trading organization. So it's a contribution that the members are making to the entity. So that's why we are seeing it as an income. So it is an income account that we are preparing actually. So members have made this payment to the entity. So the entity is receiving the money. So it means that cash is coming in into the business, right? So if cash accounts receives, what do we do to the cash accounts? The cash account will be debited because cash is an asset, it has a debit balance. And any increment to the cash accounts will be debited, any decrease will be what? Credited. So the cash that was paid by members, which is the contribution, will be what? debited to the cash account, but when we come to the subscription account, it will be credited. So cash as 20,000. Yes. Now the next item, subscription prepaid, 31st December 2020. Now, subscription prepaid, as we saw earlier, was that they are liabilities, and all liabilities have what? Credit balance. So if an item has credit balance, it is the balance brought down that comes to the credit, but the balance carried down goes to where? Goes to the debit, right? So this subscription prepaid of 5,000 is a liability, right? So once it's a liability, the balance brought down will come here when the account is balanced off. The balance brought down will come here as what? 5,000. But the carry down will come here, right? The carry down will come to the debit side. The carry down comes to the debit side, which is 5,000. It's necessary because the one that will come after the account has been balanced off will not really feature in the computation. So the one we are writing here is the most important one because this will not feature in the balancing of the account, but this one will feature. So bringing it here is very, very important. Yes, so the next one is subtraction owings. And we know that all owings are what? Are assets. And all asset has a debit balance. So the balance brought down comes to the debit side. And because it is a closing item, the brought down will come after the account has been balanced off. So balance brought down comes here, 7,000. And then our carry down will come here. Our carry down comes here as 7,000. Now we have entered all the items. We can now go ahead to balance off the account. Now when we look at the credit side, let's look at the item there, then the total. The credit side gives a total of 33,000. Then the debit side gives, the debit side gives a total of 9,000. So automatically, my credit side is more than my debit side. So I have to bring the totals for the the credit side. So let's sum them up. And you know that in accounting, all your balancing boxes must have the same figure. So here too will be 33,000. But now we have only 9,000 here. But the balancing boxes are supposed to be 33,000. So what is causing the imbalance is the amount that will be taken to the P&L accounts. The amount that will be taken to the income statements. So we have been asked to calculate the amount that will be taken to the income statements. So we can just name it income statements. Income statements. So the amount that will be here is going to be this, the balancing figure minus this, minus this. And that is what? 24,000. So when you sum all of them up, it gives you the 33,000 that we have in the balancing boxes. So this figure is what you take to the income statement as well as subscription. And you can see that it is at the debit side of the subscription account. So when you go to the income statement, which is the trading profit or loss account, it will go to where? The credit side. The credit side because it's an income. And if you are using the horizontal format, you can see that incomes are what? At the credit side of the income statement and expenses are the debit side of the income statement. So this is how we can prepare the the income account. It can be a subscription, it can be expenses, it can be a rent receivable account, it can be a commission receivable account, all forms of income that are receivable. This is how you can prepare the accounts. At times you may not have all the items, so those that you have, you use it to prepare. Thank you for watching and make